Well, hi everyone, Shaun Humphries here. Welcome to All Things Retirement. Well, in this installment, we're going to talk about tax planning, tax tips for your 2023 tax bill or tax planning year. Yes, you heard it. You're probably in the midst of gathering slips and documents for your 2022 tax filing. That's all well and good, but of course, there's not too much you can do now in terms of your tax planning. That was kind of settled for most of you by the end of December 2022, and in some cases, if you made RRSP contributions by the deadline this year for 2022. But there's no better time to focus in on 2023 tax planning than right now. And the earlier you start in the year, the more prepared you'll be to strive to reduce your tax bill for 2023. We're going to talk about 4 key strategy areas to focus in on to reduce your taxes or plan effectively. Not all these areas wouldn't necessarily be applicable to your situation, but it may be applicable to other people you know in your circle. So as you watch the video, don't hesitate to refer the video on to folks that you think would find this content helpful. And if you're new to our channel, make sure you hit the subscribe button. We're posting content all the time on various aspects of retirement and overall wealth planning. As well, if you go to the show notes for this video, you'll find some great links to various helpful resources in the area of retirement and wealth planning. So make sure you check that out. Okay, let's talk about the 4 strategies that you need to begin thinking about for the 2023 tax year. The earlier in the year, the better. Well, with a little bit of foresight and intentional planning, there's probably some ways that you can increase your after-tax income for 2023. So let's take a look at some of those ways. So strategy number 1 is what's new for this year. So there's a couple of key items that are new. Again, this may not be applicable for all of you, but if you know someone where this applies to, make sure you let them know. So the first area relates to the property flipping rules. Any person who sells a property on or after January 1st, 2023, that they've owned for less than 12 months will be taxed on 100% of their profit as business income. There are no exceptions, including the death of a taxpayer, marriage breakdown, or disability as an example. Another area that's new is the Multigenerational Home Renovation Tax Credit. To help families living together in multi-generational homes, a tax credit of up to $7,500 or 15% of allowed expenses up to $50,000 can be claimed related to the construction of a secondary suite for a senior or an adult with disability. Strategy number 2 is look for opportunities to get CRA's approval to have your payroll department withhold less tax as source. So one great example would be RRSP contributions. If you're making contributions currently on a regular basis by your institution, deducting money or your advisor's firm, that's a deduction for you. But normally when you do it that way, you can't claim the deduction until you file your tax return. You can actually make application with CRA so that your employer is authorized to give you the tax savings every month off payroll. The specific form you need is the T1213 form. So I'll go to the website right now. Here's an example of the form right on your screen. And so I will include the link for the website for Revenue Canada, the Government of Canada, and you can grab hold of this form and make application if it's appropriate for you. Now, this does not apply to individuals who are making group RRSP contributions. So if you have an employer who has a group RRSP and you're making regular contributions to that plan, you're already getting the at-source deduction value through that plan. So this only applies to those of you who are making contributions directly to your financial institution. And the way you can get that at-source savings through payroll is to use this form T1213. Now, there can be some other reasons that you would use the T1213 form as well. So it could be significant medical expenses that might be coming up, donations that you make, support payments as an example. Another example would be you may be making a request for this less withholding at source if you anticipate your annual bonus payment through work, as an example, is going to be going to your RRSP account. So there's a lot of different ways you might consider using this form, but it would be great to get that at source deduction value so you have less taxes withheld earlier than having to wait to the end of the year and then tax filing system to get the value of those deductions. Now, it's important you understand as well that when you use this form, T1213, it's for a specific calendar year. So if you've got a repeat of RRSP contributions every year, as an example, you would have to complete that form for each tax year. Okay, so we've covered a couple strategies around tax planning for 2023. Now we're going to cover off strategy number 3, probably one of the most important strategies of the whole mix. Now, the last strategy I talked about could actually save you money through the year if you end up filing the form T1213. The next strategy is more an organizational one, and that is to be organized around your tax information. So I'd really encourage you, if you don't do this, make sure you've got either a paper file or electronic file where you're organizing your information as it comes to you. So some classic things you need to keep an eye on would be charitable donations to a Canadian registered charity or other qualified donees. Medical expenses are another one, so you want to make sure that you've got a file folder or you're scanning the documents and organizing them through the year. And of course, there may be spousal support payments or other kinds of payments that you need to keep track of. Of course, you also have childcare expenses, moving expenses, and potentially employment expenses. Now, as it relates to office expenses as an example, that's a whole topic on its own, but I've got an article here on the screen that Sunlife put together. It's a really good summary of home office expenses, and I would encourage you to take a look at it. If you're working from home, you have office expenses that could be attributed to your home office, then this is a great article. So this particular article, what I'll do is I will have a link in the show notes for this video, so just click on it. It'll take you directly to this information if it applies to you. Okay, strategy number 4, RRSP contributions. I know that sounds boring and ho-hum, but it's actually a very important area for most people. So if you're working, you don't want to be not paying attention to this area. I've got many clients that have built up significant wealth over the years simply just by making monthly RRSP contributions on a consistent basis over a long period of time. And so if you're trying to maximize not just your tax planning, but also the accumulation of wealth that can be used to provide for retirement income down the road, the RRSP contribution area is very important. For those of you who are not sure exactly what your room is, you can go to your My Account with Revenue Canada or Canada Revenue Agency to confirm what your RRSP contribution room is. Let's just take a look at that right now. So this is the website for that section. So if you don't have an account already, it'll walk you through how to get an account set up, and this will give you things like your RRSP contribution room, your carry forward room, and even tax-free savings account room as well. So it's important to stay on top of that to know what your contribution room could be. I'll include the link for this particular web page for the Government of Canada, so you can take a look at that on your own. Now, when it comes to your RRSP contributions, there is also some nuance. It's not simply just making the contributions, but when you do it early and on a monthly basis, you're leveraging off the opportunity to grow wealth on a tax-deferred basis. Now, it's not tax-free growth, it's tax-deferred growth. But my experience with most of my clients over the years is that they were deducting their RRSP contributions at a higher tax rate than what they're paying when they retire and begin generating income. So if you can leverage off a situation where you're deducting at, let's say, 35 or 40% marginal tax rate, and then pulling the money out at 25% down the road, plus getting tax-deferred compounding, that's clearly a win for you. So that's one of the advantages. The other thing is the RRSP contributions that you make may not necessarily have to be claimed in the year that you make them. So in years where your income goes down for whatever reason, mat leave, you're out of the workforce, or disability coverage for a period of time, it may not make sense to claim the contributions. You can carry forward those contributions indefinitely and claim them when they make most sense for you. So the takeaway for number 4 is have a cornerstone savings program in place, leverage off it. Successful finances doesn't have to be rocket science. Often it comes down to consistent savings on a regular basis into accounts that give you a tax deduction, tax shelter growth, and then usually taxed at a lower rate than what you deducted those contributions at to begin with. A clear win for most people. Well, it's my hope that you found this video helpful. Again, for those of you who are within 5 years of retirement or already retired, if you'd like a second opinion and to find out how you can get a complimentary retirement income planning analysis, then go to our website. There's a link to our website where you can find out how you can get that complimentary forecast. As well, we have links to some helpful resources in your educational journey and wealth planning journey. Make sure you check those out. Anyway, wishing you all the best in your wealth planning and retirement planning adventures. You take care. Bye-bye.